All right, hello and welcome to Camel Finance. I'm your boy Camel, and I can't really understate this enough. This week is a massive week, massive, and I've got some cool news to show you in just a second as well, so you're going to want to stick around for this. First of all, today is the deadline for Binance and Binance US to respond to the SEC's application for temporary restraining order. So will this shake the market up? Are we just going to continue to go sideways? That's what I think, but we'll get to the charts in just a minute. Tuesday, tomorrow, we've got a motion for temporary Binance US restraining order hearing. So we'll get to find out a bit more details on this whole SEC versus Binance thing. I suspect that ultimately Bitcoin is going to do Bitcoin things. Bitcoin doesn't care. Remember that. We allegedly have the Hinman document released, which could well be a massive bullish catalyst for XRP and possibly a massive bearish catalyst for Ethereum. Now, the reason I said allegedly is because it's not of my personal belief that we're ever going to get to see the Hinman docs. And the reason for that is I just think all it's going to do is show how corrupt some of these government organizations are. And I don't know, something intuitively inside of me tells me that we're just not going to see the Hinman email documents. But of course I could be wrong. I would rather I was wrong, because let's get it out in the open, right? The people deserve to know. But I don't know, I'm skeptical about this. So I'll believe it when I see it. But one thing we do know we will see on Tuesday is the CPI data release. So as I've been pointing out, Trueflation continues to be on a 2 handle, down to 2.77% now, significantly below last month's readout. So I think we could easily get to the low 4s and possibly the 3% for Tuesday's print, which of course will be very bullish for risk assets. Then on Wednesday, we've got the US rate decision. We'll get to find out whether we are or not moving to a pause in rate hikes. Currently, we are back to just under 80% probability that we're going to see a pause at the next FOMC. So quite possible that we're going to get this pause. The markets always have a massive rally off the back of pausing of rate hikes. So this again will be a bullish catalyst. And of course on Wednesday, following the rate hike decision, we've got the FOMC statement. I'm actually going to get a suit tailored on Wednesday, so I'm not going to be able to trade around this. Not that I really do trade much around FOMC anyway. I believe they just play an awful lot of games. There's a lot of wicks, both to the up and down side. And I often say, just don't give the market makers your stops during FOMC. Wait for the dust to settle. I'll be holding my positions into FOMC and through FOMC. So that's what stops are for, right? If not, we'll let the dust settle and hopefully we can continue to get another week or so of rally before we then look to start the declining portion into the cycle lows due at the end of the month. On Thursday, we've then got the European Central Bank rate decision, jobless claims, retail sales, before Friday when we've got the Eurozone CPI, Michigan consumer sentiment, and Michigan inflation expectations. So it's going to be a very big week this week. If you're new here, or perhaps you just missed this chart, then here it is. Here's the melt up chart. Triggers some people, I know, but I know a lot of you like it. And if you're new here, this was proposed back in the summer of last year. Since then, it seems more likely that it could indeed come to fruition now than it has done since the bear market of last year. So is this going to complete? Are we going to get the pause? Is the market going to front run the pause? And are we going to be able to put in the final blow off top portion of this melt up, of this blow off top rally following a rate hike pause from the Fed? So it's going to be a very big week, as I keep saying, and things just keep getting bigger because this is breaking news from Russia. Russia's largest bank is about to enable Bitcoin and crypto trading for customers starting this month. So check this out. Russia's biggest bank is going to allow crypto trading. The largest banking institution in Russia will reportedly enable private investors to buy and sell digital currencies in the following weeks. So it's already sought approval to have its own blockchain focused ETF. That's been done as of 2021. And now the bank is going to let customers make transactions with digital financial assets. And this could come as early as June. If we talk about the individuals, we believe in June, this function will be open for individuals. Individuals will have the opportunity to buy digital financial assets and sell them accordingly, i.e. exchange them for cash. They've also said they expect this to bring liquidity to the bank's platform. So I've talked about this on and off for a long time now, with cryptocurrency not going away, with the likes of Bitcoin continuing to be adopted, continuing to grow worldwide. We are only going to see these financial institutions be forced to adopt it, or they will be left behind. One surefire way to bring liquidity into the banking sector is to enable cryptocurrency. So Russia is ready, and Russia is making the right type of plays right around the time when the US seems to be making the complete opposite type of play. Coinbase Binance, Ripple, all being sued by the SEC. Meanwhile, the likes of Russia, as you can see, clearly embracing this new technology. And speaking of embracing this new technology, look at the mean hash rate for Bitcoin. This is the 7-day moving average in orange. The Bitcoin price is in black. You can see it just is ruthlessly climbing higher. This is absolutely relentless hash rate growth. This really speaks to being about to cross the chasm for Bitcoin adoption. You can see this now. This continues to just be a ruthless inflow of capital investment into the Bitcoin network, and continues to make the Bitcoin network more secure than ever before, more decentralized than ever before. And of course, it has more underlying value than ever before as well. I found this and I thought I'd share it with you. Pretty interesting. Did you know back when the iPhone 3 came out, you needed 29,900 Bitcoin to buy an iPhone 3. By the time we get to the iPhone 7, you can see just 1.28 Bitcoin. And then fast forward to today, and we're at the iPhone 14, and it takes just 0.03 Bitcoin to buy the latest iPhone. Incidentally, this works with pretty much any commodity, whether you use bread or milk or oil or eggs or television sets. Bitcoin really is the exit, and this is a beautiful illustration of why I always say that. If you want to preserve your wealth over time, this is the way to do it. And so just before we get into a couple of charts, I wanted to point this out, and I'm afraid I have to sit here and once again beat the same repetitive drum and let you know that in orange here, we've got global liquidity. As you can see, global liquidity continues to increase. The NASDAQ 100 is above in candlesticks. You can see the correlation, right? This continues to be a liquidity story. This continues to be an entirely liquidity-driven market. And as liquidity continues to increase, it's reasonable to expect asset prices to do so as well. So as always on a Monday, I did the deep dive over the weekend, and not much has changed since it's only 11 in the morning UK time here. But here we go, right? Bitcoin still trading in a range, still upsetting everyone. The bulls, of course, get excited every time we get a green candle, and every time we get a red candle, you get the people come out and call for the bottom of the range and 10K, so on and so forth. But this is what I think we're doing. I think we're in a 60-day consolidation cycle. All of this FUD that's been out there at the moment cannot bring the price down, can it? I mean, the bears have had every piece of bad, bearish news they could possibly hope for, and the price is still holding above this yellow macro support at 25K. This is still holding a beautiful retest of the range breakout, setting up for that cycle low, which is due in just a couple of weeks now. And then I think it's time to go again. So not much has changed there. XRP, consolidation above support, typically bullish. So can we expect this green squiggle not to happen now? I think we're getting close to that point. If this green squiggle is going to end up playing out, it's going to have to lose this area of support pretty quickly. Maybe that can be catalyzed by not getting the Hinman emails on Wednesday, but perhaps the Hinman emails do come out. Perhaps I'm wrong about that. And if that's the case, then I would only expect a massive pump up here for XRP. That's why we're long. We have technical reason because we've got breakout and we're holding this range. So as you can see, we're long, we're strong, and we continue to push and see what the market can give. Big focus on Apple here. I want to hold these supports as always, and I want to make sure we can break out above all-time highs as well. So need to pay attention here, lose these supports, and I'll be out the trade. Tesla, I kind of expect to have some sort of pullback, although according to this current gap, doesn't look like that's coming just yet. I think it's reasonable to expect some short-term volatility over the next couple of days, but after we get through the uncertainty of FOMC and CPI, then I do think this is going to continue to resolve lower before we actually get a proper spike from the VIX. So I'm going to get rid of these blue squiggles for now. I still think this green squiggle is going to work out for the volatility index. And I think that once we get down slightly lower, maybe some sort of counter trend bounce the next couple of days, and then we'll move from here down, something like this. And assuming we can get down there, then I think what we can do is draw some trend lines in and look to get long the VIX on a trend line break. Maybe we could even take an even steeper one, something like this. So expect me to go long the VIX near the end of this month. Although, let me be clear about this. This is not the giant VIX trade that I've been talking about on and off. This is not the trade of the year VIX trade. This is just going to be a short-term swing trade as the S&P 500 completes what I think will be its final move up before dropping into that daily cycle low. And whilst we're in that decline, moving down to the daily cycle low, it's reasonable to expect some sort of short-term VIX pop. But then once we found those cycle lows, I think the VIX is going to roll over, make its way all the way down to the very low teens. And of course, I believe what we'll see from there is the S&P 500 find its cycle low, something like this, and then rally out of here to complete that final blow off top portion of the melt up. So going to be a choppy week, as it always is. As I often say, let's let the dust settle. Let's see what the market can give. Not get emotional, not be zooming in on the charts and focusing on your charts from this sort of angle, okay? Nobody needs to be focusing on candles this zoomed in. this is only going to harm you, okay? So make sure you've got a bigger picture, make sure you know your levels, make sure you're sizing your positions correctly. And lastly, I just want to talk about gold. Gold, I still expect to lose this upward sloping support line. Now, it hasn't done it yet, but the moment it does, expect me to enter a short position on gold, targeting much lower numbers before we can then think about going again. So it hasn't happened yet. I would expect maybe there'll be a bunch of pop-ups and wicks into Wednesday, and then finally we'll get the direction. So if we can lose this upward sloping blue support line, expect me to short the gold market. So that's it from me. I hope you're doing well in life. I hope you're ready for the week. And in the meantime, take care from me. All the best. Cheers. Bye.